You're watching Investors Guide on ET Now. Thanks for staying with us. Dhirendra is with us as well in our Delhi studio. And it's time for us now to do our product review of the week. And this week, we're looking at the Franklin India Flexi Cap Fund. Avan is here to give us an introduction, as she always does. Avan.
If you have a lower appetite for risk, then the Franklin Flexi Cap could be worth looking at. Its consistent performance over the years and better performance during market downturns has given it an edge over its peers. The fund has given an annualized return of over 18% to its investors since its launch since February 2005. Its relatively curtailed participation in market rallies makes it a better fit for low-risk investors. Franklin India Flexi Cap is an open-ended, diversified equity fund with a mandate to invest in stocks across market capitalization segments. Well-timed sector and market cap falls appear to have been the key drivers of its performance. While a predominantly large cap focus and higher allocation to defensives had helped it steer through the market correction in 2008, relatively less scathed. The fund wears a low-risk tag given its sustained exposure to large cap stocks across market cycles. Besides, the fund's selection of stocks and sectors within the mid-cap universe too has been rather conservative. In terms of sector exposure, however, the fund appears to have adopted a focused approach. The top three sectors held by the fund are financials, energy, and technology. Let's do some simple maths to get you a better perspective. If you invested 1,000 rupees in this fund when it started, you would have 3,038 rupees today.
Thanks, Avan. That was the Franklin India Flexi Cap Fund we're talking about. Dhirendra, we keep talking about picking a fund that has a mandate to diversify across the market, especially if you want to invest in the long term. And now here is a fund that's managed to fall less than its category in bear markets. It's managed to rise more than its category in bull markets. So would you recommend this as one of the funds that you keep talking about? Is this a good fund to put our money into?
Yes, it is an above average fund. And it has done exceedingly well over the past 6 years it has been in existence. Comparing alternatives, comparing options, there are superior options available, even from Franklin Templeton. So if I have to choose this fund, it always crosses my mind that why not Prima Plus, which has a more compelling and more impressive history. And also, this fund has not been able to, it has not leveraged its Flexi Cap mandate to its fullest possible extent. So it has not been that big a beneficiary. But I would say that net it has been an above average and shown fairly consistent return relative to peers.
All right, we know that this fund had a revised change in management in February this year. Would you say that's affected its performance in any way? Is that something that its investors should be concerned about?
No, not really, because there are a couple of things which varies from fund to fund. But in case of Franklin Templeton Fund, most of the fund management is fairly templated. So, of course, fund manager plays a very significant role, and I think he's one of the crucial differentiator in driving the performance. But I don't think anything radically changing with this fund. And I think some of the fund manager changes, they change for the better too.
The Franklin India Flexi Cap Fund ranked top 10 in its category last year. Where would you place it this year, Dhirendra? What's your final rating for this fund?
I would give it a 4-star. Though on a risk-adjusted scale, it is a 3-star fund.
All right, 4 stars there for the Franklin India Flexi Cap Fund. We have time for one quick question. 30-year-old Partha is written in. He tells us he's been investing 1,000 rupees every month in Reliance Mutual Fund. This is interesting. He hasn't mentioned the specific fund that he's been investing in. He just knows the fund house. He also has 50,000 rupees in fixed deposits and 1 lakh invested in the National Savings Certificate. Now, his aim is to create a corpus of 1 crore rupees when he retires. He wants to know if his portfolio is on track. Now, the reason why I'm bringing this up is obviously Partha is someone who saves on a regular basis, invests on a regular basis, but he hasn't put in the kind of research that he needs to put in when he invests in mutual funds, because he doesn't even know which specific fund he's invested in, and they're all so different from each other. So when you look at his portfolio right now, what advice would you give him?
First and foremost, I would just like to put some perspective to his, plan of SIP. To accumulate 1 crore rupee for your money to earn 12%, it should be a minimum of 3,500 rupee being saved. assuming that, the equity turns out 12% return over this 29-year period, which I'm not very, I'm hopeful that, it will be substantially more than this. It's a fairly conservative expectation from equity on a 29-year basis. Which fund to invest? That is crucial. And I think, if he's looking for aggressive growth, then he should invest and at least on an annual basis check where his money is invested and it is still qualifies as an eligible investment.
For 1,000 rupees a month or maybe a little more than that, which fund would you recommend he puts his money into? Can you give him a couple of names?
29 years, if he can withstand decline, I would say, HDFC mid-cap opportunity and, IDFC premier equity, those kind of investment. If is, there are a couple of ways through which it can be achieved. Even a balanced fund can help him achieve his goal with great stability. So it is not that, my recommendations matter. I think, what allocation you should get into and what kind of style you should get into, that is something which an advisor should suggest him. And after having a basic broad discussion on just to gauge his temperament.
Alright, so I've run out of time on this segment. Remember, you can write to us if you have questions for Dhirendra about your money or about your investments. There's an email ID at the bottom of your screen. Dhirendra, thank you so much for joining us this week and answering our questions. Alright, on the other side of this break, we're going to answer questions that have come in on tax. Find out if you need to pay tax on money or property that you've inherited. That's on the other side. Don't tell you.